Hi, this is Lara at Elliott Wave Gold with an extra video update for you after the trading session dated Wednesday 31st of May has closed. Again, a high may be in place here or very soon indeed. Use the channel on the hourly chart, wait for it to be breached before having confidence that we have had a trend change. Once that happens, the target is either 1064 for the first weekly chart or still 1157 to 1149 for the second weekly chart. Elliott Wave analysis first, classic analysis last. The Elliott Wave analysis has 4 weekly charts. The problem here is I expect prices within a B wave at cycle degree. There are multiple structural options for B waves, so we have to be flexible and have multiple wave counts, and then rank them in order of probability based on how common the structure is and what classic analysis tells us. My first most likely wave count for cycle B is this one, which sees it as an incomplete double combination. Double combinations are really common structures, so this should have the highest probability. The most common combination of corrections within a double is a zigzag and a flat correction. Here we have a zigzag for primary W, a deep 3 in the opposite direction, labelled X, joins the two structures in this possible double combination, and primary Y would most likely be a flat correction. They subdivide 3, 3, 5. Within wave A, from this low to this high, this movement does look best as a 3-wave structure, so this wave count also has a good fit. The most common structure for a B wave within a flat is a single or multiple zigzag, and so far this looks like a good 5 down, and this looks very much like a complete 3 up. If it moves any higher, it can't move beyond the start of A above 1294.96. Within the flat correction of primary Y, the minimum requirement for the B wave is 1140.27, so that it retraces a minimum 0.9 the length of the A wave. The new target would see it do that and would see it reach within the common range. The most common length of B waves within flats is from 1 to 1.38 the length of the A wave. At 1064 here, minor wave C would reach 1.618 the length of minor A, meeting the minimum requirement. When intermediate B is complete, then we'll have a target up for intermediate C to complete the flat correction of primary Y. It's most likely to see price end up around about the same level as primary W, so that the whole structure for cycle wave B is a big sideways movement, because combinations should look like sideways movements, which is why the X waves are usually quite deep. Let's have a look at the second weekly chart, which has only a slightly lower probability, where the end of cycle A is this point down here. It's entirely possible that cycle wave B could be continuing as a regular contracting triangle with a zigzag for A and B and C, and a single or double zigzag unfolding down now for D, and then a final single or double zigzag, or maybe even a triangle up for primary E, most likely to fall short of the AC trend line. To these weekly charts, I'm adding this McGee trend line. In the text article, I've given details on exactly how to draw this. I've drawn it from the start of the bear market, the all-time high of gold back in 2011, to the first major swing high within the following bear market. That's how we draw a trend line for a bear market according to the outline given by McGee in that classic technical analysis of stock trends, one of my favourite technical analysis books. It's a good, solid, simple overview of classic analysis. While price remains below this trend line, we should assume that the bear market remains intact. For this weekly chart, it would see price remain below this McGee trend line. For the first weekly chart, that trend line would most likely have to be breached, but then we'd expect price to return down below it. So if this trend line is going to work, as McGee trend lines most commonly but not always do, then the second weekly chart might have a slightly higher probability. I can see another way of labelling this as well. It's possible we could have A and B could be incomplete. It could be moving lower as a double zigzag, subdividing W, X, and we'd have Y to move lower. That's also possible. Once we get some more downward movement, then I might start to publish another idea for the triangle for cycle wave B. As at this stage there are multiple structural options that cycle wave B could be taking, so we've got lots of different wave counts. At this stage, if we're looking at a zigzag down, we have a 5 and the 3 can't move beyond its start above 1294.96. Both weekly charts expect downward movement at this stage. It's just the depth which is different. For a contracting triangle, D can't move beyond the end of B. For a barrier triangle, D should end about the same level as D. So if this is a barrier triangle and B was over here, then D should end close to 1123.08. That invalidation point, though, is not black and white because that's the only Elliott wave rule that has any area of grey. As long as the BD trend line remains essentially flat, a barrier triangle here will remain valid. Only when the BD trend line has a downward slope would we discard the idea of a barrier triangle with B here. Unfortunately, that involves a fair amount of subjectivity. When D is over, then E can't move beyond the end of C. Let's have a look at the daily chart now, which for this triangle idea would see primary wave C as this high up here, and for the first weekly chart it sees that as intermediate wave A within primary Y. Both of them are expecting a 5-3-5 zigzag downward is unfolding. So far this does look very nicely like a 5-wave impulse, and this looks like a very deep 3-wave zigzag. This is the maroon trend line which is copied over from the weekly charts. It is, if we see any more upward movement, where I would expect final resistance. It looks again like we may have a high in place for minor wave B, but while price remains within this channel, which is slightly redrawn today so that it contains all of this movement, we must accept the possibility that we may not have a high in place. Price certainly could continue a bit higher, and if it does, look for very strong resistance at this trend line. If price does come up to touch that trend line, I will definitely expect it to end its upward movement there. Draw this best fit channel from the start of minor B and the end of minor A down here along the lows within here on the hourly chart. Place a parallel copy up here on the end of minute A. Let's have a look at this at the hourly chart level, where minute wave B, this low down here, is this point down here. So I've drawn this lower edge of the channel along these lows here and to contain all of this movement. While price remains within it, we must allow for the possibility that minuet wave 5 is not over, and it certainly could continue higher. If we see the lower edge of this channel now breached clearly by downward movement, then we can have some confidence that we've probably got a high in place. After that, look for a throwback for price to find resistance at previous support at the lower edge of that channel. The target is the same as explained at the weekly chart level, and remember, the other weekly chart has a much higher target. Both of them expect downward movement. It's just the depth of this next wave down which is different for them. The alternate idea is still possible within minor B. Minute wave B may certainly be continuing further sideways. As an expanded flat correction, there's a problem now within it. Minuet wave B is a 3-wave structure. It's a regular flat, but its C wave is now longer, quite a lot longer than equality in length with a S wave. It just doesn't look at all like a regular flat. That reduces the probability again of this alternate, and it doesn't have as much support today from classic analysis. Both of them expect downward movement for the short term anyway. This is the fourth weekly chart idea. I have another one, weekly chart 3, is published in the in the historic analysis. It has too low a probability to be published on a daily basis. This weekly chart is bullish. It expects that we're just going to continue on up. It doesn't have as much support from classic analysis, and it has a couple of problems in terms of Elliott wave structure. This idea looks at cycle B continuing higher as a double zigzag. To do so, it'll have to breach that McGee trend line as well, which is only a slight problem at this stage. The problem here is within the double zigzag. Here's the first zigzag, that's fine. The zigzag is joined by a 3 in the opposite direction labelled X, but this is a very deep X wave. Double zigzags usually have quite a strong slope against the prior trend. Here the prior trend was down, the double zigzag should be sloping up. But with the depth of this X wave, it gives the whole thing so far a sideways look. Even if the second zigzag does move substantially beyond the end of the first, they don't normally have very deep X waves like this one is. So that's the first problem, reducing the probability of this weekly wave count. Here's the second problem. From this low to this high, this upward movement does not look very good as a 5-wave structure. This part of the wave count looks forced. It will fit, you can make it fit at the hourly chart level, but it doesn't look like a 5 at the daily or weekly chart level. Now, gold often forms curved impulses because its second waves are very commonly more time-consuming than its fourth waves, because it develops momentum toward the third wave and then even greater momentum in the fifth wave for a blow-off top in a bull market, which forces fourth waves before those strong fifth waves to be more brief and shallow. So I could handle a second wave here that was more time-consuming and deeper than this fourth wave, but this is the other way round, so this actually looks very strange, opposite to what normally happens for gold. That really does reduce the wave count and reduce the probability, of this alternate wave count. Okay, let's have a look at some classic analysis. I shan't go over the weekly chart, I've done that in the last video. Let's have a look at what's happened today. We have an upward day, a higher high, a higher low. It's come on a decline in volume. There was not support from volume during the session for Wednesday to push price higher. This upward movement lacks strength, it is weak, so that's a little bit bearish. We have an upward movement here, a sideways pennant pattern. Using the measured rule, we'll expect a breakout. After we've had the breakout, we'll have a target about 1310. When we look at previous analysis on the weekly chart, that is a really strong area of price support and resistance, so it's quite reasonable to expect, if price gets up there again, for it to halt for some time. On the way up, next resistance is about 1295, but this is looking a little bit weak. We had a bearish signal here from on-balance volume. We've got some upward movement here. On balance volume is moved higher. There's actually a little bit of divergence here, although I haven't noted it on the chart. We have a new high for price, but a lower high from on balance volume, so that's slightly bearish. On balance volume is pretty close to resistance, and so that may help to halt the rise in price here. RSI is still not overbought, so there's still further room for price to rise, but ADX now, just today, is extreme. The black ADX line has just crossed above the green DX line, and that tells us that the upward trend at this stage is now entering into extreme territory. Still a little bit further it could go though, and ADX could rise higher as price continues up until it reaches 35, so it could still continue for a few more days, but it is entering extreme territory. That, in conjunction with weak volume and on balance volume being really close to resistance, looks like a high is either in place here, or look out, it could be coming up really soon. ATR is overall flat to declining, while price is overall moving higher. ATR has been overall flat, so this upward movement has lacked increasing range, which would be normal for a healthy trend. As price moved higher, also Bollinger Bands for most of it were contracting. That's also not normal for a healthy trend. Usually it comes with an increase in volatility and a widening in Bollinger Bands for a healthy trend. We're starting to see a little bit of a turn and a slight increase in volatility now as price has moved a little bit higher for a couple of days. Stochastics is overbought, but this can remain extreme for quite long periods of time. It does not exhibit any divergence with price at highs to indicate any weakness short term, so price certainly could continue higher, but today it is looking rather weak and there is some resistance here. Let's have a quick look at GDX. This is less clear than yesterday. GDX also has a continuation pattern. Flags and pennants are the most reliable continuation patterns. So taking the flagpole from this low to this high and the breakout expected about 23, the measured rule gives us a target for GDX after the breakout about 26, but before we can have any confidence whatsoever in that target, we absolutely need to see an upward breakout, an upward day closing comfortably above the upper edge of the flag pattern on a day with an increase in volume. During this flag pattern, moving sideways essentially with a slight downward slope, volume is strongest for downward days, which tells us it's more likely we're going to see a downward breakout that contradicts the continuation flag pattern. On balance volume is still constrained. It looked like yesterday like we might have gotten a weak bearish signal from on balance volume, but that's been negated, so I've redrawn the yellow support line here. Let's watch on balance volume very carefully again. Sometimes on balance volume breaks out of a small range prior to price breaking out, and that tells us what direction the breakout for price is going to be. So that can be quite useful. When it does that, it's usually fairly reliable. While the flag pattern is unfolding, ADX is declining, telling us the market's consolidating. ATR declining agrees, and Bollinger Bands contracting and now steady also agree. So it all certainly is very obvious that GDX is consolidating. What direction the breakout is going to be is the only question. Volume says down, the flag pattern says up. Let's use on balance volume to tell us which way it's going to go next. That's all from me with your extra video update. I hope all our members are having a most fabulous day.